Hello guys, good day and welcome back to my channel. In this video I'm going to take you through a topic or a lesson called time frames and top-down analysis, or in short, top-down analysis. Now when we say top-down analysis, we mean that to begin analyzing the market on a bigger time frame to get a bigger picture of what the market is doing, and then switching to smaller time frames to decide whether to buy or sell the market. Okay, so to begin from a bigger time frame, we have time frames like now what you are seeing here is a daily time frame for euro USD. Okay, now when we say daily time frame, we mean that each candlestick you see here represent one day. Each of the candlestick you see in this chart represent one day. Okay, so when I say daily time frame, I mean one day, each candlestick representing one day. All right, now let's move on. With the top down analysis, we mean beginning from what a bigger time frame and then switching to a smaller time frame to decide your trade entry. So you can begin from the monthly time frame. Whenever you enter the market, make sure you check out what price is doing on a higher time frame, like the monthly time frame. You can start from the monthly. Okay, so you click and then you check what price is actually doing on monthly basis. Okay, so after you have decided or you have seen how price is behaving on monthly basis, then you can switch to a smaller time frame like the weekly time frame. You go to the weekly, you see 1M, that is 1 month, then 1W is weekly, 1 week. Okay, so you switch to weekly and then you see what the market is actually doing. Okay, yes, so you can use the bigger time frame to see the trend or the direction of the market. So clearly you can see that here market was in a downtrend. From here to the downside, market was in a downtrend. Okay, then you scale down to the daily time frame. From weekly you go to the daily time frame to check if the market is respecting your monthly and weekly direction. Okay, so you realize that here market was also respecting the monthly time frame and the weekly time frame. Market was in a downtrend. Then you can scale down to the 4 hour. You can scale down to the 4 hour, the 1 hour, the 30 minutes, 15 minutes, 5 minutes, and the rest. Okay, so beginning your analysis from a higher time frame, from like the monthly, the weekly, the daily, 4 hours, 1 hour, down to 1 minute is what we call the top down analysis. It means that you are actually looking at the overall trend of the market, or the overall picture of what is actually happening in the market. Okay, so mostly for top down analysis, it is mostly used by price action trader. If you are a price action trader, then you should adopt analyzing the market from a bigger time frame. Now there are a few things I want to share with you. Okay, now as a price action trader, your primary time frame should be the 1 hour, 4 hours, and the daily. Okay, so if you're a price action trader like me, your primary time frame should be the 1 hour, okay, the 4 hours, and the daily. Meaning that at least when you open your chart, you should look at the daily, what happened within the day, the 4 hours, and then the 1 hour. You decide to use this. If you want to take trades using the 1 hour chart, you have to look at what happened within the daily, the 4 hour, and then the 1 hour. And if you want to trade on the 4 hours, then you should consider 4 hours. You consider analyzing the market from the weekly. You look at the weekly chart, you come to the daily, and then you scale down to the 4 hour, and then you look at what the market is doing before you take your trade decision. Now the reason is that there are a lot of noise in the smaller time frame. Buyers buying, sellers selling, price goes up, comes down. There are a lot of noise, but price action works on bigger time frames. Okay, using bigger time frames would help you to avoid low probability setups, meaning that when you are using bigger time frames, it will prevent you from taking unnecessary trades. It will actually give you picture of what is happening in the market. It gives you a clear picture of what is happening in the market. Top down analysis means, like I've told you, to begin on a bigger time frame and then scale it down to a lower time frame. And then we also have, I'll take you through some analysis using the top down, but I want to give you some trial informations before we dive into it. Now, top down analysis helps you to identify the most important support and resistance levels. Okay, so if you look at this chart that I have drawn, using the daily time frame, which is a higher time frame, it's actually helped me to identify key levels in the market, the resistance, the support, okay, the resistance and the support throughout the market. So one key thing is that it helps you to identify the most important support and resistance levels. And then the second thing is that these areas represent turning points in the market. These areas, this support and resistance levels helps you to identify, okay, key levels in the market. So this was a resistance. You realize that when price got to the resistance, it dropped all the way down, went back to a resistance here, dropped all the way down. So the top down analysis will help you identify these key areas, which are the support and resistances, which are what key turning points in the market. And then another point is that it helps you identify the market structure. Top down analysis helps you to identify the market structure. I've already talked about market structure in my previous video, so if you don't know what a market structure is about, you can go back to check. Then it also helps you identify what would happen in the subsequent week, based on your weekly chart or your month, what happened within the month or within the week. I would do a demonstration for you to see as well. Then top down analysis helps you to identify price action signals. Now let's dive into it. If you look clearly from this high, line, let me put a line here so we can see. Okay, all right, so this was Thursday 27 January 2022. Okay, that is the market started from the top here on Thursday. Okay, Thursday 27 January 2022. So from that moment, from that time up to this end where market came below here, that was Thursday November 3rd 2022. The market was actually in a downtrend. Okay, you could see clearly that market moved from the top straight to the downside all the way. The market was in a downtrend. So if you are able to use the top down analysis to identify the trend of the market, and you identify your resistance, your supports, okay, you'll be able to follow this trend and be selling the market and be making profit out of it. Okay, so that is how important top down analysis is. Then another thing is, we talked about it helps you, the previous candle helps you to know what is actually happening in the market. Now let's look carefully here. Okay, now this was the end of the downtrend and the market picked another direction. Okay, market picked another direction, was going up. I want us to look at the current this is the daily candle. Let me switch to the weekly. Now if you consider the weekly time frame, let me delete these lines. I think we are done with it. this should also go away. All right, so let's look at now. This is the weekly time frame. Okay, I want us to consider the current week. The current week. You realize that the market moved from the top to the down, and then it started change. There was change of what direction? Market changed direction to the what? To the upside. Okay, our market was trending up from the bottom. It trended up, retraced, went up, retraced, went up, retraced. Okay, now you realize that there was a break. If you are familiar with market structure, there was market went high. Okay, that's a higher high, and then formed a higher low, higher high, higher low, higher high, and then you realize that market retraced and broke or break this low. Market break, price came below this low, so it means that there has been a break in market structure. Therefore it tells us that market has what changed direction, and this price is no longer going to go up. Okay, so you just wait for a retracement. Okay, and then you realize that the retracement could not also break this high, therefore it is a confirmed downtrend. So you realize the market will now start forming what lower lows and higher low, lower lows, higher low. Okay, good. Now look carefully at what happened this week. We are going to use the top down analysis to analyze the market here. What happened this week? Now today it's 8th January. Like I said, it's a weekend, it's a Saturday, and you know the market doesn't work on the weekend, but you realize the market gave us a strong bearish pin bar, a strong bearish pin bar, which is as a price action trader, which tells you that in the subsequent days or in the subsequent weeks, market is going to really sell because of these pin bar. And you realize that market, this pin bar is forming at a key area, in the market, because if we are to draw a trend line, okay, to confirm our downtrend, okay, we pick the trend line 2, and then we can draw our trend line from the top. Let me pick it once again. All right, so let's see, we can draw our trend line like this. Okay, let me draw it well. Good. So we have our trend line here, which is a clear indication that market is going down. And then when price got to the trend line, you realize that it's giving us a strong bearish pin bar, which is a sell signal. As a price action trader, it should tell you that in the subsequent weeks we are going to have more sales on the Euro USD. We are going to have more sales in the market on the Euro USD. So you should be looking at what sells, because this is a downtrend market. Okay, we spotted the change of market structure here when this low was broken. When this low, because market was in an uptrend from the bottom to the top here, then we realized that market was able to break this lower low to form a new low here, and then it went up again and then started forming lower lows and higher lows. And yeah, so that's the confirmation that there has been a change in markets, what trend or change in market direction. If you have watched my video on change in market structure, you will understand what I am talking about. Okay, now this week, this is 1 week. Okay, this candlestick, bearish candlestick, is representing 1 week. Now you know 7 days makes 1 week. Okay, 7 days makes 1 week. So let's go to our charts and see for ourselves. Let's go to our chart and see for ourselves. So let me go to the daily time frame. Good. So on a daily time frame, we have this candle closed on Friday. So we have Friday, Thursday, Wednesday, Tuesday, Monday. Okay, so you realize that from the previous days, market was bullish, market was going up. So all you'll be thinking is that price will continue going up. Okay, when you are using the daily time frame. when you are using the daily time frame, it tells you that market is in what, an uptrend. It was going up, it was still bullish. But if you do not go and check what is happening on the weekly, when we go back to the weekly, you realize that price was on a key area. Okay, price was on a key area, price was on a resistance zone, on a diagonal resistance line. So it is likely that price may reverse, and truly you realize that all the days market was bullish, all the days market was going up. But on the Friday, because price has gotten to a key level, look at how strong bearish market sold up to this end. Okay, look at the bearish movement market moved with. Okay, so it means that when we are to scale back to the weekly time frame, then we are going to consider that in the subsequent weeks market is going to drop down, it's going to sell down. We are going to have something like this: markets selling down, coming down. Yes, that is what we are expecting. Okay, so this is how price action helps, this is how top down analysis and multiple time frames helps you to identify key areas in the market, so you'll be able to take your trade decision. So always make sure that you start from the monthly time frame, you see what is happening in the month, you scale it down to the weekly time frame, you scale it down to the daily time frame, and then you can scale it down to the other lower time frames like the 4 hours, the 1 hour, and the rest, to actually take your trade decisions. Thank you so much for your time. If you have any questions, you can leave your comments in the comment section, and I'll respond to it as quickly as possible. I would be with you in my next video. You can spend a second to like my video, and then if you are new on my channel as well, you can subscribe, and then you click on the notification icon so that you can get updates on all the videos that I'll share on Forex. Thank you so much and have a wonderful week ahead.